So what we've seen is Bitcoin, after Trump was elected, had a great run to all-time highs of just about 110,000, just under that. And then it kind of faded from there. But Bitcoin was up from the day before, and it was kind of perplexing. So the question is, has Bitcoin really decoupled from risk assets? Are people looking at it and saying, all right, this is what I want to own? Like even gold was down. And they're saying, do I want to allocate to Bitcoin because there's so much uncertainty in the world? Or is it that Bitcoin drew down first and now it's found a spot where it's going to hold steady here? It's really found a bottom. It's already had that local bottom. And that's the question. And that's what everybody's trying to figure out.
James Lavish begins by making the sobering point that the financial system is not as stable as it appears. The fissures beneath the surface are growing, despite the appearance of control from central banks and government authorities. Lavish identifies a poisonous combination of growing debt, unmanageable interest rates, and an overburdened monetary system. However, he presents it from the perspective of Bitcoin as a lifeboat, a decentralized hedge against a system on the verge of collapse, rather than raising the alarm in conventional terms. He explains the reasons behind institutional capital's covert preparations for volatility and how Bitcoin's place in international portfolios is changing from that of a speculative asset to one of strategic need. Furthermore, Lavish views Bitcoin as a financial revolution rather than merely a store of value in a world where inflation is no longer transitory and confidence in fiat money is fading. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
What do you think of the different routes of possibilities? What are you seeing and what are you looking for in the next few months?
Yeah, I mean, thank you for having me. Always good to talk to you. The markets hate uncertainty. And when, what we've seen is, if we look at the markets through a kind of a Bitcoin lens, but the overall market, what we've seen is Trump was elected and this new administration came in and they have been very pro-crypto, pro-Bitcoin. They immediately came right out of the gates and he issued an executive order within weeks of starting his term. And that executive order was to establish a Bitcoin strategic reserve. And so that was supposedly a kind of a gating event, and that Bitcoin would rally off of that. But it didn't rally, it fell. And so it was confusing to people. The outsiders, they didn't understand what was going on. But really what was going on is that the Bitcoin investors and people who were speculating that strategic reserve would include some sort of measure to buy Bitcoin. Okay, so but there was no measure to buy it. There's only a measure to add to it in a budget neutral sense, in a budget neutral way. So Bitcoin dropped. So what we've seen is Bitcoin, after Trump was elected, had a great run to all-time highs of just about 110,000, just under that. And then it kind of faded from there. And it faded for multiple reasons. We started getting some economic data that was suggesting just more inflation. Bond prices were, they were dropping and rates were rising. And that was because people are expecting for more bond issuance, massive bond issuance, and more inflation and possibly stagflation. And so started getting some market uncertainty there. Bitcoin started to draw down, fell below 100,000. Then we get that strategic reserve announcement and it really starts getting hit and people were disappointed. And then you had a steep drawdown with market uncertainty and tariff threats, like you said. And Bitcoin draws down a total of 30% from the all-time high. And so it starts to climb back and you get this continuing uncertainty in the market. And like you said last week, then we started to see that kind of watershed moment where investors realize, oh, he is dead serious. This isn't a threat. Like he's going to really enact these tariffs. And the general market got very nervous and started selling the risk assets, started selling the S&P. And Bitcoin went down ahead of it and with it. And then Friday came along and the market opened down 3% on the opening, which was a gap down of 3%. But Bitcoin was up from the day before. And it was kind of perplexing. So the question is, has Bitcoin really decoupled from risk assets? Are people looking at it and saying, all right, this is what I want to own? Like even gold was down. And they're saying, do I want to allocate to Bitcoin because there's so much uncertainty in the world? Or is it that Bitcoin drew down first and now it's found a spot where it's going to hold steady here? It's really found a bottom. It's already had that local bottom. And that's the question. And that's what everybody's trying to figure out. I think the most probable path is continued volatility, which means that it's not stair step and it's not just a jump up to the next plateau. It's more like this. And then you'll see one big jump up from that volatility and then it'll form that new plateau, which is kind of like what we've seen recently. You have the volatility up to 60,000, kind of held that plateau. You have volatility now to over 100,000. It's kind of holding the 80 plateau. So does it then have the volatility of doubling in size overnight? So it's absolutely possible for Bitcoin. If you have the passage of the Bitcoin the Bitcoin Act, okay, or you have something like the U.S. government announced they've sold gold to buy Bitcoin. They probably wouldn't announce it first. They'd probably do it, and then or you have a large nation state announce that they bought Bitcoin, right? So it's maybe one of the BRICS nations or maybe another developed country like Germany. Like if that ever happened, I don't see that yet. But or the EU, or if you had a very large corporation adopt Bitcoin in their treasury strategy, and not doing the volatility play like Michael Saylor is doing for MicroStrategy, but something like a Microsoft or an Apple or one of these massive companies that are holding, tens of billions of dollars on their balance sheets, and they turn around and start buying Bitcoin, that could then propel it to a level, increase volatility for a moment, but to the upside mostly. So, and that's what I'm looking for.
Tariffs may appear to be straightforward policy changes, but James Lavish notes that their effects are far-reaching. These modifications triggered a domino effect that compelled businesses to reassess their profit-making strategies, move supply chains, and restructure their operations. All of this takes time and makes an already shaky economy even more insecure. Lavish advises investors to have a long-term perspective, particularly with regard to Bitcoin. According to him, what matters most is how Bitcoin acts over a period of months, rather than how it changes in a day or a week. Bitcoin may be breaking away from traditional markets and developing into a fully autonomous asset class if it begins to move consistently in a different way from the Nasdaq and other stocks. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
So the tariffs, they can be seen as kind of a one-time event in that the tariffs are set, it's a one-time repricing, and then, we move forward. It could be seen as that, and the market will adjust around that, but the fallout from it is really uncertain.
Second order effects, yeah.
Correct. So the question is, how long does it take for these companies they have to, some of them have to pivot, some of them have to just reorganize their business around certain lines. Some of them have to build facilities here in order to start getting better margins again. So it takes time, like you said. So what I want to see is a sustained decoupling. And even if it's the market's going up and Bitcoin's not going up, or the market's going sideways and Bitcoin is doing its own thing, as long as it's not directly correlated to the Nasdaq, that's a really good sign to me that Bitcoin is decoupled. But to me, that's not just a couple of days or weeks. Like that's got to be months and months of that. And so it remains to be seen whether we're on that path or not. So the question is, if there's $900 trillion of assets in the world, investable assets in the world, which I just spoke about, then is Bitcoin gaining share of that? Is it getting larger as a share of those investable assets? Or is it just following the expansion of the money supply that it goes from 900 trillion to 1 quadrillion to 1.1 quadrillion? Is it just following that? So that's the question. And as adoption continues, is it breaking away and saying, this is now a separate asset, a store of value? And really, to answer your question about institutions, and pension funds and endowments of traditional money managers, the real traditional institutions. It's when do they start to understand that Bitcoin is not a risk-on asset? When do they start to understand that it is truly a separate store of value? It's a scarce store of value and the ultimate risk-off asset when you step back and understand it truly. So when do they get to that understanding? And I think that we're starting to see that's accelerating. They're not adopting it yet, but that the research and the knowledge base is expanding. And that has to do with what we talked about at the beginning, which is the US government is now, they're investing in Bitcoin. And so the game theory is not just sovereigns, but it's everybody. If the US government is investing in Bitcoin, why am I not investing in it? What am I missing? What am I missing as a traditional money manager that I'm not looking into this and I don't see it the same way there's other people do? And so as that occurs and we ultimately get the Bitcoin Act passed by Senator Lummis, whenever that happens, it may take months, it may take years, but once that happens, then you've got the traditional money managers that will say, okay, now it's moved from a risk to own asset to a risk of not owning any asset. And I've got to treat it separately in my portfolio. And that's when you really get that decoupling and adoption.
In his conclusion, James Lavish explains how tariffs have unforeseen long-term effects while appearing to be one-time policy measures. What matters most is what occurs once the market quickly adjusts to the new pricing imposed by the tariffs. It might take months or even years for enterprises to reorganize, restructure their supply networks, or even build new facilities in order to maintain their profit margins. As a result, the economy becomes even more unstable and turbulent. Amid all of this, Lavish is keeping a careful eye on Bitcoin's actions. He is searching for a persistent decoupling, which indicates that Bitcoin is no longer moving in tandem with tech equities like those listed on the Nasdaq, rather than just short-term price fluctuations. The commencement of Bitcoin's development as a sophisticated standalone asset class would be a significant turning point if it were to behave independently over an extended period of time. However, Lavish thinks that attitude is beginning to change. The rationale reverses when education spreads and nations like the United States start to become engaged. Institutions will soon have to wonder, what am I missing if the US government is investing in Bitcoin? This might eventually cause a significant change in perception, making Bitcoin less dangerous to own rather than dangerous. Lavish contends that after that, Bitcoin will be seen as a genuine store of value in the contemporary financial world and will no longer only be an alternative asset. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.